And what better place to get in one of our special voices this week, Ramesh Damani, who's of course one of the top and most respected voices when it comes to the Indian stock markets. And let's remember, 2023 was a dream run for the Indian stock market, and there are lots of expectations for 24 in the period ahead. A lot of people are saying that the Indian markets may well be one of the sweet spots in the global economy. But any time when everyone says that or a consensus builds up on something, you always tend to worry, because that perhaps is a sign that some profit booking or something else could be around the corner. But let me not wait any more time. Let me welcome Ramesh Damani. Ramesh, thank you so much for joining us. There are very few people I know who have a better take on what's happening when the Indian economy in general, or the stock markets, of course, in particular. So 2024, how is it looking to you, both the economy and the stock markets?
Yeah. Thank you, Vikram. Thank you so much for having me on your show. I appreciate it. 2023, as you correctly pointed out, was a banner year. I think we need to put it in the context. We had a banner year because the stock market was what we call a bull market. And the bull market began actually in 2019 when the finance minister, then Nirmala Sitharamanji, cut the corporate tax rate to 25%. During COVID, it went and tested the lows, but didn't remain there, and it powered higher. And that's the magical thing that your viewers need to understand about the stock market, that once a bull market takes place, it's a miracle of nature. It starts the country at a different position, and by the time it ends, the country is at a different position, your portfolio is at a different position, corporate India is at a different position. So I think we're in the midst, in the full flush of a bull market right now. And just to give you an example, I'll point you out to the Japanese bull market that started in the late 60s when Japan hosted the Olympics, the first Asian country. And over the next 25 years, the index went up, I think, 40, 50x in yen terms. So in dollar terms, it went up even more. So I think we're in the midst of one of those more productive phases in India, where the economy and the bull market are both firing, both supporting each other. So I think we need to salute the bull market in India first.
Well, you know, if you look at the Sensex, for example, it was what, 5,000, 6,000 20 years ago. It's 70,000 right now. So people could argue that it's been in a bull market for a while. Everyone starts to get nervous when the markets go up a lot, because you say, well, you know, is there a crash coming? Is there profit booking coming? But are the fundamentals looking strong? Because that's what experts seem to be saying, almost by consensus, that the fundamentals are looking fine. The Indian economy could continue to grow at 6-7%. Therefore, earnings will grow. Therefore, there's no real reason to doubt that this bull market is going to come to an end. It could be 4 years more, 5 years more, 7 years more, 10 years more. Who knows?
I know. I wish it is 10 years more. Even I would wish that. But every bull market tells a story, Vikram, as you're well aware. And when the bullish phase, and there's one thing, of course, that's always true, that no bull market ends well. All bull markets end badly with a very sharp fall. So you go back to the 92 bull market, which went from 4,500 Sensex back to 1,000, the 2008, which went from 21,000 to under 10,000. So even this bull market will end badly. I have no reason to doubt that. But that's no reason not to participate. When the market tops out, it gives you a signal of very heavy leverage, very heavy craziness, very, very heavy IPO market, market reacting to the news. Right now, when the good news is coming, market is still rewarding it. Market will not react to good news. So there'll be a whole bunch of indicators suggesting that the market has probably topped out. And the most famous saying, of course, of all time is that the panwala will start giving you tips. I don't think we've reached that stage yet. I think we are probably in the second stage of a three-stage bull market yet. And I think investors should distinguish between what we call risk and volatility. Volatility is when the markets go down 500 points, 1,000 points. That can happen almost any time. Risk is if you permanently lose capital. I don't think there's a great chance of that right now. There is volatility and there will be volatility. But the good news is that, in my opinion, the bull market is well and intact.
Ramesh, when bull markets come to an end, as you well know, two things could cause it. One is that the bull market collapses under its own, excesses, if you like. Valuations have gone up too high and there's a bubble out there. Happened in 2000, happened in 2009. Those are the sort of things that happen. Valuations have gone up too far. There's been too much of a party and now you're facing the hangover from that party. So that's number one. Number two is when an event happens. That event could be a war. That event could be political instability, election result goes some way that people are not expecting it to, or something else happens, a new law comes in, some new taxation comes in. Which of these two do you think is the bigger risk right now when it comes to India?
No, clearly, Vikram, in my opinion, the risk to bull markets is always one. Reason one, when they become heavy, when interest rates are too high, when there's too much leverage, there's too much speculation, market collapses of its own weight. Typically, the bull market, even a war, while markets will go down on 9/11 or any such major event takes place, market will correct, but it will rebound and pick up the pieces from where it fell. So in my opinion, it has to be of its own weight. Over history, over many bull markets in America, India, Europe, Anglosphere, you will find that markets collapse ultimately of their own weight. I don't think we're near that point yet. And I don't think even, let's say, a change in election results in India would cause the bull market to be derailed, because that is the nature of the bull market. It has to reach its destiny.
But if I could ask you on the fundamental health of the Indian economy, could that, at the end of the day, is what is going to underline the fact our valuations stretch or not? Are companies doing well? Are earnings continuing to go up? Is the Indian economy on track? If that continues, then as you were saying, the bull market is okay. What is your sense from whatever the companies you're researching, people you're talking to, what are they telling you about the health of the Indian economy now and maybe looking a few years in the future?
Well, two things, Vikram. The first point you said, war can derail it. And we're fighting two wars right now, which we not anticipated. A Ukraine war and a war in Israel. And these are pretty, major conflagrations, if you will. And despite that, I might remind you the NASDAQ was up 40%. So, once the bull market starts, it's a force of nature. It cannot be contained. That's unfortunately, that might be hard to understand, but that's the truth of the matter. Now, in terms of what is happening in this bull market, Vikram, in my opinion, every bull market has a story of leadership. For example, in the 90 bull market, the cement stocks led it. In 2000, it was the technology stocks. Every bull market has a story. So what is the story telling us in this bull market? I think it's the growth of the great Indian middle class. I think we're on the verge of an explosive rise in the Indian middle class in terms of income. And what is leading this bull market, particularly, as you might be happy to note, is one of the most benign and neglected and under-owned and underappreciated sectors in India, which is the public sector stocks. And for that, we really need to give a lot of credit to the DPAM, Department of Public Asset Management in India, and the Prime Minister, because what he's taken is this huge investment we made in this public sector since independence is finally bearing fruit. And because of better corporate governance, better management of issues, increasingly public sector companies, Vikram, is hard to explain this, are coming out with an OFS. It's getting absorbed and the price is going up significantly higher after that. So that's a game changer basically for the market. And that sector in particular is now leading the market to new highs. And I think that will continue to maintain leadership in the sector. So whether it's defense, whether it's railways, or whether it's some of the commodity companies, some of the consulting companies, I think across the gamut, the public sector stocks are getting re-rated in India. And the other sector stocks are now, following suit out there. But the leadership very clearly, in my opinion, belongs to the public sector stocks in India.
So public sector, of course, have been one area that's done very well. What would be some of the other sectors that you would be keeping your eye on? Would it be if the Indian middle class is growing, and it is, per capita income rises, then consumer stocks start to do well, consumer discretionary in particular, people have spending power, they can travel, they can buy white goods. Would that be an area that you're looking at? Infrastructure, perhaps, with all of these roads being built and money going into the railways and so on and so forth?
Yeah, Vikram, it's a good point. Vikram, typically infrastructure, the government is the leading edge of spending on infrastructure. The amount they're spending on railways, the amount they're spending on power is coming through government public sector. So that explains some of the rise out there. If India is a great growth middle class story, of course, the consumer stocks will do well. They haven't done particularly well so far. But I'm particularly, bullish still, while market has not recognized that, on the technology stocks. While the service stocks may not be that attractive anymore, the back office guys, the BPO guys, the KPO guys, I think India will become the back office to the world, because not only is office space attractive in India, telecommunication costs are very cheap in India. So if we can find people that are doing a good job in terms of BPO, back office work in India, I think those will have a huge story and a very compelling story for many years.
Right. And any other areas? I mean, now that we've got you on the line, I'm sure people are watching this, glued to try and get tips from Ramesh Damani on what they should be possibly buying or investing in. Which would be the other areas you would be telling them to keep a close eye on?
Well, I think the first thing I want to tell them, Vikram, is that one of the great mistakes in a bull market is to make a $20 profit on a market that moves at 25,000 points. I mean, it's a great mistake to trade this market. You need to invest with some conviction in some good quality businesses and retain them for the duration of what you think in the bull market. So what you need to do is position yourself that when this bull market ends, you're far richer, far stronger, far wiser than when the bull market began. So I would avoid the temptation to just book profits and try and keep finding new ideas. Find something you believe in. It could be consumer, it could be tech, it could be the public sector stock, and retain ownership of that stock, because typically the valuation spread between the start of a bull market and the end of a bull market maybe 20, 30, 50x sometimes in cases of good stocks. So my first thing is that remain invested. I think there's a lot of interest right now in the stock market, but perhaps wrongly placed other than the SIP will be actually enormous.
All right. Ramesh, you've just said something really important. So you're saying don't try and trade. If there are people who are watching this, young people in particular, getting excited by the stock market, you're saying excitement is now not why you should be doing it. Don't trade. Don't try and say, I'm going to buy something and it'll go up tomorrow and I'll do it. You will not make money that way. Do it the Ramesh Damani way, which is buying a stock, buying a good stock, and sit on it for 10 years and then see what happens. Is that what you're saying?
That's exactly what I'm saying. People can trade and you'll make money in it, but at the end of the day, you will not make wealth in it. And you need to make wealth in the stock market. The stock market is to make wealth. And here is a secret that I keep sharing anytime I get on public platforms, that if you can move your money at 22, 24% compounded over a lifetime, you're going to be very rich at the end of the process. And that is what the stock market is all about. If you start with any amount of money, in 30 years of compounding at 23, 24%, will make you 1,000 times that money. So why do you want to it might be more fun to do trading, might be more fun to do options, but then go express your opinion in the horse races or in some other place. But the stock market is a place to create genuine wealth, and genuine wealth is created by people who manage to hold on and have a vision for where the country or the company is going.
So then last piece of advice, and I think what you've just said could be, if somebody really pays attention to what you've said, it could be life-changing. If someone doesn't know how do you pick the right stock and how do you do it, should they just bet on the India story, buy an index fund, buy a large cap fund, and then not do anything, just sit back and watch it for 10 years or 20 years?
Yeah, Vikram, I think Warren Buffett has expressly mentioned this advice. He says that you're a hairdresser, you're a lawyer, you're an engineer, you're busy in your work, you don't have time to pick stocks. It's something that people of my genre do all the time. We do this for a living. So you don't have the time. The best way to do it is a low-cost index fund that will track the index. So if the index goes to 100,000, the Sensex, for example, you'll make 30% on your money from that point on. So typically, of course, you want to buy it when the index is low and when there's a bit of despair on the street. Right now, there's a bit more euphoria, a bit more widespread participation. But if you don't know how to pick stocks, either trust a good fund manager who espouses the same long-term philosophy, or go to a long-term index fund. I completely agree with that philosophy.
All right, Ramesh Damani, thank you so much for joining us in the first episode of the India Story for 2024. Really good advice. I hope people will listen to you. Thank you so much for joining us.
Thanks, Vikram.